the great copper deposits are probably going to, a lot of people are going to be looking at working them harder. That means Zambia. It also means other countries in Africa where there is likely to be a sort of interest in, developing more copper.
Hello to viewers tuning into Assay TV. We're getting insight into some research on China and their actions towards the transition to renewables and associated battery minerals supply. And I'm with Clyde Russell of Reuters, who's going to be presenting us some of his research findings. So Clyde, over to you. Thank you very much.
Thank you, Adam, and welcome to everybody who's joining us. Just a little bit of brief about what I do. I live in Australia, but I used to live in Asia. I've spent a good 20, 25 years looking at commodity markets. And for the last 20 of those, I've really been very focused on Asia, the rise of China, and what that has actually meant for commodities. Obviously, China is the elephant in the room, but it's one that everybody can see. It is the world's biggest consumer of commodities, biggest importer, and a major producer in its own right. So I think what I'd like to do today is have a look at how I see things currently and where the opportunities are, what China's doing, and what they're looking for, and how other people can participate in that. And we will bring in a bit of the Russia-Ukraine thing, because quite frankly, that's just changed everything in a very short period of time. So when I do these sort of presentations, I tend to look at the idea of what we know. The we in this is the sort of general market consensus. It's not something, some secretive group. It's what is the market talking about? What do they actually feel quite comfortable with? As I mentioned, China is the world's biggest importer of commodities, and it dominates especially in metals. One thing that is also quite interesting is they've made a very strong commitment to change to renewable generation and to decarbonize their economy. I know they're sort of net zero by 2060 sounds kind of woolly and far away. What's more important with China is they actually have some pretty firm 2030 targets. And among them is that they want to have 40% of their electricity generation by renewables and nuclear by 2030, rising to 80% by 2060. Given that currently about 65% of their electricity generation is coal, that's quite a change, because it's not just you losing coal generation, you're also losing other thermal generation, such as a small amount of oil and a slightly bigger amount of natural gas. What is also becoming very clear is that if China does aggressively adopt and follow through on its energy transition plans, it's going to need massive quantities of metals, especially copper, nickel, and iron ore used to make steel. These are metals that it has limited domestic resources on, and it has to import vast quantities. China already takes almost 70% of the world's seaborne iron ore, 50% of the world's copper. It is already a major player, and it's going to be wanting more at the same time that everybody else in the world is probably wanting more as well. If the other thing that China has been doing quite dramatically, and I've got a little bit of a slide on this later on, is electric vehicles. They have been shifting quite quickly to electric vehicles. Yes, they're still selling more internal combustion engine cars at the moment, but it's quite clear where the trend is going. And if they are going to continue that, they're going to need a lot of lithium and a lot of cobalt. And we know that the Chinese have been active in trying to secure those kind of reserves, particularly in the developing world. Then we get to what we don't know. And I've put it as, how much of a spanner in the works is Russia's invasion of Ukraine? I think what you're going to see is the world is probably going to divide into two different camps again. Not quite the same way as the Cold War was, because Russia is very much going to be a junior partner to China in this case. I'm not going to try and predict the outcome of the war in Ukraine. The only thing I think I can say for certain is that Russia emerges from this a much, much weaker country. Already its GDP is not much bigger than that of Australia, a country with a fraction of its population. It's very expensive to fund wars, and they're about to lose quite a lot of revenue. Yes, I know commodity prices have increased dramatically, and what you lose in volumes make up in price increase, That's not going to apply necessarily to the Russians because they're having to offer their commodities at substantial discounts in order to get people to buy them. I'm not talking about natural gas to Europe. I'm talking mainly about crude oil and coal in this instance. But also, you've got to remember that Russia was a major exporter of steel, copper, aluminium, nickel, all those kind of commodities. The Western world is going to pull back from buying them. Yes, other people will be prepared to buy them, but they'll want discounts, and it's going to be harder to arrange transportation, logistics, freight, insurance. All those kind of things are going to make it very much harder to deal with Russia. So you've actually had a supply shock that actually hasn't really come through yet, and I'll show a bit on that. But that supply shock is coming, and prices have risen in anticipation of that supply shock coming on. The other thing we often, we also look at China as this sort of massive behemoth, and it is, but we also, tend not to look at what is the rest of the world doing. And there's some very aggressive plans in Europe and in other developed countries to build out renewable energies as fast as possible. And I think that's probably going to be the ultimate legacy of Russia's invasion of Ukraine, is everybody's going to want to guarantee energy security. And if you're in a place like Russia, that means you don't want to be, if you're in a place like Europe, it means you don't want to be importing fossil fuels from potentially unfriendly countries. And in some ways, you don't really want to be importing fossil fuels at all. So I think, short term, there's a credible demand for fossil fuels right now, and to get us through this patch where we expect to lose quite a lot of Russian cargoes. But over the longer term, I think it is a tremendous, tremendous negative for fossil fuels, because right now, people are saying they're unreliable and they're expensive. And there's two things you don't want to be, that's it. The other sort of big unknown is, as we transition the world's energy system, how long do coal, crude oil, and natural gas remain dominant in energy systems, and which one goes first? If I was hazarding a guess, I would say seaborne coal goes first, because it has become extremely expensive. And you can already see across Asia that while there are still coal plants being built, you're starting to reach that tipping point where the new builds aren't more than the old ones being retired. And so net coal generation might start to drop, especially in countries reliant on imported coal. So let's have a look at a few price graphs. I tend to think of this as quite an interesting one, because it shows that the Chinese PMI and copper, everybody thinks, oh, copper is, the Dr. Copper, the industrial metal, shows everything. It has not a fantastic relationship with China's PMI, which is quite interesting in itself. But they do tend to move more or less in the same kind of trend. That as copper, as the PMI rises, copper tends to go with it. Especially, in recent months, you've had a little bit of an uptick in the PMI, and you've had an uptick in copper. Obviously, copper also got a kick up from the Russia-Ukraine situation. But the basic message is, when I look at copper, what I actually see is a world that's going to be very short of copper in the sort of medium term. I was talking with a couple of analysts recently, and one of them said, actually, to make enough copper for the world for the energy transition by 2050, there have to be 5 new mines the size of Escondida, which is the world's largest copper mine, brought on. And his view was that there aren't 5 deposits the size of Escondida to bring on, and expanding existing mines to add that sort of level of output is going to be very expensive and very difficult. So very bullish long-term copper. That's particularly relevant in countries that have the ability to explore for more and bring it online. And I think you're going to find that the great copper deposits are probably a lot of people are going to be working them harder. That means Zambia. It also means other countries in Africa where there is likely to be a sort of interest in developing more copper. I did mention about Russia's energy exports. They're easier to track than exports of metals from Russia. But what you can basically see there, as I've done exports of crude, coal, and LNG for this year. And so far, you're not actually really seeing any downturn in those exports. In fact, April is likely to be a stronger month than the previous three. But I would point out that in physical markets, it takes quite some time for contracts to wind up, for things to stop happening. So, oil that was loaded onto tankers in Russia in April would have been bought in February, perhaps even as early as January. So it takes a little while for those kind of, contracts to end and for people to pull back. So the invasion was on February 24. You would think that by mid-March, end of March, a lot of European and Western buyers in Asia, so your more westernized countries like Japan and South Korea, would be starting to think about pulling back from buying from Russia. So I expect that you'll actually see those exports start to come off. Because from what I also see, they haven't been able to effectively substitute other buyers. China's not buying a lot of coal from Russia at the moment because it's ramped up domestic output. India would like to buy more coal from Russia, but there's logistical challenges in that. And so, I would expect that you will start to see these graphs trend lower in coming months. But the point is, it hasn't happened as yet. But coal prices have responded dramatically, and I would actually argue almost catastrophically to Russia's invasion of Ukraine. You already had a fairly tight seaborne coal market, especially in Asia as economies were recovering and reopening from the pandemic. So you had quite strong demand for thermal coal. These are thermal coal prices that I'm showing. Richards Bay in South Africa, the delivered price are in Amsterdam, Rotterdam, Antwerp in Europe, and the green line is Australia's Newcastle index. So you can see that they all basically move in a line together. But what is interesting is that you have this massive kick up at the end of February when Russia invaded, because people thought that the one commodity that the world can get rid of quite quickly and that will be the first to be self-sanctioned and disappear is Russian coal. And I think what you've actually seen then is an enormous call on all the other types of coal. It is really affecting flows around the world, because what you're basically seeing is that South Africa used to sell the bulk of its coal to Asia, and now a lot of that coal is flowing back into Europe. And I think I actually have a graph on that. So this is just a graph going back to the beginning of last year that looks at South Africa's coal exports to Greater Europe and to India, which was its major buyer. And what you're really seeing there is that while India is still buying some coal from South Africa, it's ramping down, especially in recent months, the level of imports. And exports to Europe from South Africa have gone from negligible, and in fact in April last year there was no cargo tracked, have gone up to getting close to that 1 million tons a month level again. And that's simply a factor of the Europeans can afford to pay for coal at these extremely elevated prices, and they will do so. Does this mean that everybody should be rushing off and investing into coal mines? Probably not, but it does mean that if you own one at the moment, you're going to be making a lot of money. But this is a short-term crisis, most likely. It's not a long-term price signal like copper, that we need to invest a lot of money to expand copper production. It's probably not going to last. The other thing is, when I said prices are catastrophically high, you're going to see massive demand destruction in developing Asia on thermal coal imports. So countries like India, Pakistan, Bangladesh, the Philippines, they just simply can't afford to pay these prices, so they won't pay these prices. They will, seek alternatives, but they might even do power outages. That's something that's certainly happening in Pakistan and India. So they will go without power rather than pay a price that is massively loss-making for them. But on the longer term, this is going to accelerate the drive to renewables. Which brings us to renewable metals. Again, you've had an enormous kick up in most of them, especially lithium. We're looking at a huge increase in battery-grade lithium. But you're also seeing quite large increases in the price of graphite, cobalt, and nickel. So the main things that go into your batteries. This is because EV demand is going up, but also household battery demand and indeed utility scale battery farms are all more and more coming to the fore, more and more being seen as a solution. So what you're going to see is China in particular is basically the world's leading manufacturer of batteries. It's going to be trying to get hold of as much of this material. I think there's a sort of emerging trend or thought in them among people who make or use batteries, like automobile manufacturers and people who make them for households, that they need to get hold of the resource themselves. Buying on an open market is just not a good idea anymore. So I think you're going to see quite a bit of M&A space opening up. I also expect to see the Chinese kind of aggressively pursue lithium projects, particularly in Africa and in other developing parts of the world like South America. I don't expect to see them coming to places like Australia because I think they now view Australia as a fairly hostile investment environment for China, given the sort of breakdown in political relations between Beijing and Canberra. But that means that the Chinese are probably going to be looking very much at other places in order to place their investment and see what resources they can get hold of. I think it is incumbent upon governments in those countries to make sure that they get the best deal possible out of this. China does have a reputation of using a lot of its own resources, as in people and capital, and not really contributing that much to the countries in which it operates. That has been their model. They say they'll build a power plant, but they bring all the material, they bring all the labor, they bring all the expertise. So that's kind of thing that I think anybody wishing to do business with China has to be aware of, is that you have to negotiate hard to get the best deal for your country and allow them to exploit what is effectively a finite resource. So just a quick look at global sales of electric vehicles. And I think what you can see there is, China is just jumping ahead of everybody else. This is 2020 and 2021, and you can see that electric vehicles are taking off in China. Surprisingly, given we all have this stereotype of Americans driving huge petrol-powered pickup trucks, the US sales have actually more than doubled as well. But you're also starting to see quite a big take-up in Europe. What you're not seeing is a big take-up outside of China in the rest of Japan. And I think that's mainly a function that government policies there are yet to incentivize people to buy electric vehicles, so they remain expensive relative to their petrol and diesel-powered competitors. So I think I'm probably getting to the point where I should be wrapping it up. And I think what are we actually looking at as the main themes? I do see Russia's invasion of Ukraine as a major short-term disruptor. It is going to especially boost energy commodities, coal in particular, and it remains to be seen just how much of an effect it has on crude oil, refined products, and something like LNG. I mean, you've got to remember that Russia supplied between crude and refined products some 7 million barrels a day to the world markets. That's, not quite 1%, it's about 0.7% of global consumption. Obviously, not all of that is going to disappear. There are people who are still going to buy it. But I think you're going to find that anytime you disrupt flows around the world, there is a cost of doing that, and it makes things harder. And generally, prices respond going up. But it is probably a short-term phenomenon, what's going on there. But it will last for, probably be disruptive for a number of months, even if and we all hope for some kind of peace settlement in Ukraine, even if that does happen, the disruption continues for a little while. But it's not a long-term effect. This is something that is a 2022, maybe 2023 problem, and then the world adapts and it moves on. What it is I think there's two ways that you can come out of this. Right now, there's an incredible demand for fossil fuels, and fossil fuel companies and promoters are saying that shows you need much more investment into fossil fuels in order to meet that demand. The opposite point of view is that this shows that fossil fuels are expensive and unreliable, and you don't really want to, be beholden to a country that you might end up in conflict with. So best to actually go to something like renewables, because once you install them, you're not relying on imports from anywhere. They generate themselves, and it's a more safe and secure way of securing your energy. I tend to feel that in the Western world, they're going to massively swing towards renewables. I think in the developing world, it will really depend upon what resources they have and what kind of government policies are adopted. I think in countries like India, this is going to boost renewables quite substantially. But there are other countries where they might go down the other path of trying to secure more fossil fuels. Another longer-term trend that I think is unstoppable is China's renewable drive is gathering pace. It will get bigger as years go on, and they will demand more resources. At the same time, the rest of the world, particularly the developed world, Europe and North America, they're going to be doing the same. And there just simply isn't enough of all the key metals to achieve our current energy goals, especially for copper. Now, if you are going to be short of supply, there's two ways to boost supply. One is to have the price rise so high that you either get demand destruction or a supply response. Given that we're probably not looking at demand destruction as a realistic option, unless we give up on climate goals as a planet, you really have to see a supply response. So you're going to see, I would imagine over time, the price of certain of these key battery metals rise in order to incentivize enough production. And along with that, you need to try and get as many moving parts going as possible. So that means investors have to be able to take a few more risks, particularly in countries or jurisdictions that they might not be so comfortable with. And governments also have to make it easier to develop mines, and people have to be willing to finance them. So I think I've said enough, and I'll leave it there. Thank you very much, and back to Adam.
Thanks, Clyde. Excellent. Really good stuff. I just had a couple of questions to sort of supplement what you've already covered, really, but maybe go into a little bit of depth about some of the points. And just to quickly start with that, one of my questions is around this 2030 target that China has introduced that you mentioned, or a number of targets. Often in the West, the targets that have been set by UK, for instance, US, are criticized based chiefly on the lack of mineral resource and refining capacity and downstream capacity to get to sort of net zero targets, or sort of eliminating IC vehicles, for instance. Do you see, obviously China's under similar pressures in terms of getting materials to enable their renewables and their EV build out, but do you think they're better positioned to achieve them, or they're going to be encountering the same problems that we're going to be encountering in the West?
I think they're going to encounter the same problems. I think that the Chinese actually have a fairly good track record at overcoming those kind of problems. I mean, there are some advantages to living in an authoritarian state or running an authoritarian state, as you can direct resources to where they are most needed, and you can sort of force companies to comply, and you can basically tell them to cut their profitability in order to meet a bigger goal. And you see China doing that all the time, where it basically cuts the amount of money that utilities are getting in order to keep power prices in a certain range. But these sort of things happen. So I think that is perhaps, if there is an advantage to authoritarian, centralized control, that might be it. They're still going to face a problem of how do they get things. But what China has got is it's got quite a lot of financial heft. So if they want to import more copper, they can simply outbid everybody else if it comes to it. I think it all depends on just how determined the Chinese are. I think what they've realized is that they want to be a leader in the energy transition. They want to be the sort of source of a lot of these products. They plan to export them as well. So this is how they're transforming their manufacturing base, is we're now going to make the things for the energy transition. So they're going to be sucking up as much as they can, but they will also supply finished goods to the world if the world wants them. And so, yes, they're going to have some of the same pressures, but in some bizarre way, I think they're actually better placed to handle them.
Yep, certainly. Yeah, and if you look at the nuclear build out, it makes sense that they're going to sort of switch with that income be compatible with renewables as well. But playing devil's advocate here, if there's so much coal build out in China, are they really going to be able to dial that down and just sort of leave coal that quickly by the end of the decade?
Well, that's an interesting thing. They are still building quite a lot of coal-fired power plants. That much is true. On a net basis, they are retiring quite a lot as well. And if there is a good thing about this, is you retire old, less efficient plants and you build modern, new, ultra supercritical plants. In theory, you generate the same amount of electricity and you use less coal to do it because you've now got a more efficient power plant. So there is that sort of gain. I acknowledge that that's not a huge gain, but if you replace a 35% efficient power plant with a 45% efficient one, which is what the new ones are, then you sort of end up making that sort of gain. I think what you've got to do is question, if you are building a power plant now, most power plants have a minimum life of 40 years. If you're aiming at net zero 2060, that's 38 years from now. So you're sort of saying, well, I'm not certain this power plant is going to last the distance. So unless you sort of say we're only going to run them for 25 years and we're just going to have a shorter lifespan and keep replacing them with more efficient ones, that could work. But net zero for China is going to look quite difficult if they are still going to be relying on fossil fuels like coal. I've always said the problem with coal is the last people to get rid of it are going to be the people who have vast domestic resources and vast need for power. And basically, I'm looking at China, India, Indonesia. These are countries with huge coal resources, big populations, and a need for power. So they're going to be the laggards in getting rid of domestic coal for domestic power. Whether they can do it by 2060, that's 2060. I'll be in my 90s. It's a long way off target, which is why I prefer to focus on how quickly are they sort of lowering the share of coal in their current generation mix. That is happening. It's probably not happening as fast as environmental activists would want, but it is something that is happening.
Yep. It's interesting, fascinating to see how it's going to play out. But with the geopolitical relations being redefined globally as a result of many things, not only Russia and the war in Ukraine, but you mentioned sort of trade tensions with Australia and China, for instance. It seems that that's going to provide an overlay to the already strained scramble for resources that we're experiencing. It's going to hold good prospects for countries in Africa who are resource rich, for instance, provided they can strike the right deals, as you mentioned. But it strikes me that some regions or countries are going to lose out here. They're not going to be able to find the resources that they want. They're not going to be able to. If everyone's gunning towards a net zero plan, it doesn't strike me there's enough materials in the world. The copper, for instance, that you've highlighted, 5 Escondidas, that can't come online quick enough.
Well, I think you also got to be careful of falling into that sort of Malthusian trap. I think the world clearly has the ability to mine enough stuff. It just has to have the right incentive pricing in place for this to happen. Yep. So, there is enough copper in the ground that can be, brought up, or indeed you can boost recycling. And there's also, a certain amount of technology to reduce copper intensity in various things as well. So if you put all your, sort of abilities together, you probably can do it. I think you're right in the sense that some places are going to lose out. Traditionally, who loses out is the poorest countries who can't afford to pay for these things, who are sort of left struggling along. But if some of those poorer countries have, resources that the rest of the world wants, yes, they then have a tremendous opportunity. I think the problem in Africa in particular, and to a lesser extent, but still very much so in South America, has been governance of these countries has been lacking. It's been too easy for them to be either corrupt or authoritarian, or just not skilled enough to deal with sophisticated other governments or sophisticated multinational corporations. So I think that's where the risk comes for a lot of countries that are sitting on resources, is how do I actually get these resources exploited in a way that benefits my people and my country, but also makes it worthwhile for credible, decent operators to come in and do that. Now, they're not necessarily all Western people who do this. There are some very skilled, very good Chinese companies out there. I've certainly been to some projects that they've done and been very impressed with the level of skill and professionalism. And it's not like every Chinese company is out to screw its host country. That Western companies are guilty of that in equal measure. But I think you've got to get to a point where there has to be some sort of rethinking of how these resources are exploited and who gets all the benefit from it. A Western company digging up lithium to make batteries for Westerners to drive cars is not really any help to a country like Bolivia or Chile. They've got to somehow benefit from it too, and that's going to be quite a hard thing to do. Indonesia had a go at it by by sort of banning the export of raw minerals and forcing, I guess is the right word, companies to beneficiate inside Indonesia. That has worked to a certain extent, mostly in nickel, but I don't think it's delivered the huge benefits that they were hoping for. It's just sort of added a little bit of value rather than a lot of value. My personal preference is, you strike royalty agreements, that are actually, give quite a lot to the host country, and then you sequester that money into sovereign wealth funds, so it's not wasted and spent away by irresponsible governments. But that's just one way of looking at it.
Yep, certainly. Okay, well, I think we're out of time, but Clyde, thank you very much for giving us key drivers behind commodities in the short term and the energy transition and China's position. It frames it very well ahead of one-to-one mining investment Cape Town, which we'll be at in a couple of weeks, and I look forward to seeing you down there.
Indeed, I'm looking forward to coming.
Thank you very much.